Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is Jeff Halley. He's a senior market analyst, Asia Pacific at OANDA. Hey Jeff, thanks for coming in on Monday afternoon.
Happy Monday, Brian.
Now, before we get your insights, Jeff, let's take a look at how markets in the region are performing right now. And we'll look at the Nikkei. It's at 0.75% up at 30,242.94. The Shanghai Composite is down 0.06% at 3,693.88. The Shanghai Composite is at 30,785.57. It's up 0.46%. ASX 200 is flat at 6,794.10. The Kospi is down 0.43% at 3,094.58. Now, across ASEAN, we've got these. We've got the Bursa Malaysia at 1,580.79. It's down 0.26%, and the SGX is up 0.34% at 2,890.35. So, Jeff, a very mixed bag across the region. What's your view on this?
Yeah, I think it's more of a hurry up and wait day. The moves in China have been driven by China-specific announcements or news headlines that we'll discuss in a minute. The rest of the region seems to be showing some sort of cautious optimism. It was a very sideways finish again for New York on Friday. Most of the three main indices all closing just each side of unchanged. So that's probably the second or third day in a row where we've had some sideways days, and so there's a little bit of impatience there by investors to take risk off the board ahead of the weekend. The news outlines were pretty quiet over the weekend, but I think what we're seeing is the moves in base metal prices and energy in particular are very supportive of somewhat supportive of some of the regional markets around here, such as the Singapore, Indonesia's, KL to a lesser extent, and certainly Australia. So it's sort of a lack of direction day, and I think that's markets have been left to their own devices because of it.
Now I'm going to take your cue on the China story. Now, this morning we had a one-year loan prime rate that was left unchanged in China, 3.85%. That was roughly in line with what analysts and traders were expecting. Now, given the surge of US Treasury yields and the spread compression with these Chinese 10-year yields, what's your view on the impact of the yuan and on Asian currencies?
Well, I think part of the reason the yuan has rallied is because it has actually had quite a positive carry, so to speak, over the last year or so. Rates have remained quite high in China, vis-a-vis being cut all across the developed world. Obviously, it's a little difficult to play that trade because China doesn't have an open capital account. So getting access to the Chinese government bond market, you need to get quotas, etc. But you can play it via the offshore dollar CNH. And I think a lot of the appreciation in the Chinese yuan this year, onshore and offshore, has been driven by that interest rate differential. It was completely expected that they would leave the 1 and 5 year rates unchanged, the loan prime rates. China has actually been quietly withdrawing liquidity over the past couple of months via the repo market. They're trying to sort of deleverage parts of the economy in targeted ways by sectors. So I expect that to keep on going. I think they're trying to avoid bubbles, particularly in the housing market.
Now, staying on China, on Saturday, China's regulator finalized guidelines on banks' internet loan businesses. So, I mean, to just give an example, commercial banks now must jointly contribute funds to issue internet loans with a partner, and that proportion for the partner should not be less than 30%. So this is a big change from the past, where basically the banks essentially were left holding the baby. The internet partner took very little risk. How is this going to impact investors' appetite for tech stocks in China, and given obviously that more regulation may likely mean less profits?
Well, I think this is all part of trying to level up the playing field. It's another kidney punch for Ant Financial and by default Alibaba. I think we can see the reactions there in the Chinese markets today. The CSI 300, which is much more tech heavy and weighted towards Shenzhen, is down about 1.8% the last time I looked at it, while the Shanghai broader composite index is around flat. But if you look at the Shanghai 50, the 50 biggest market cap stocks, that was also down by about 1.8%. And it's very heavy in these giant banks, Chinese banks. So that fallout is there for all to see. So I think this is an ongoing process where China is trying to get a much more firm grip on who is lending to what, where, and to also make sure that these tech companies are appropriately regulated. So actually in the near term, it's prompted some speculative profit taking after some pretty awesome rallies over the course of the first 7 weeks of the year. But yet again, I think it means that there's probably more regulation on the way.
Now, looking ahead this week, what are some key data points and events that investors should be watching out for?
We've got CPIs in Singapore and Malaysia. Hong Kong, to a lesser extent, won't be that much of a market impact, but they're expected to be negative. So I think what we're seeing is this two-speed recovery going on. We're seeing inflation creeping up in some parts of the world, notably the United States, lesser extent perhaps Australia, etc. But actually, when you look at the CPI numbers in China, you look at the CPI numbers in ASEAN, they're all pretty much flat to negative in most cases. So although the export economies, manufacturing sectors are all firing on all cylinders, domestic consumption remains very muted. People are saving money, not spending money. And until we see international borders reopen, I don't think we're going to see a swing in that confidence. So that's one thing to look at, very Asia specific. The main event, though, will be the Jerome Powells testimony for 2 days on the Hill, on Capitol Hill, from I think Tuesday night US time, tomorrow night US time. And the market will be very, very closely hanging off every word to see if he's still as dovish as he has been, or if he gives any signals about tapering, which I think he won't, but the markets will be looking for any hint there. And the markets are on edge because, as we can see, US 10 and particularly 30-year bond yields have risen quite sharply, and the US yield curve has steepened noticeably.
Now, Jeff, thank you very much for your insights.
Pleasure.
Now, we've been speaking to Jeff Halley. He's a senior market analyst, Asia Pacific at OANDA, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.